Good afternoon, everybody. This is Mark Lambert from Theta's Pendulum. It happens to be July 21st, approximately 1 o'clock in the afternoon, Eastern Standard Time. And I'm just going to do a little bit of a follow-up on the S&P 500 and the ESs, which are the S&P 500 futures, just to show kind of like where we're looking at the market structure to be at this point in time. And also, just as a note for those who do look at these videos, we are going to be moving from the Theta's Pendulum Trading Group from Yahoo to probably Google Groups sometime this weekend, this upcoming weekend. Only reason being that the Yahoo groups have been very, very slow in forwarding our emails. A lot of times, both myself and my partner Tony have been posting things up, and when we post things up, sometimes it doesn't appear on the website until 3 or 4 days later, which is not serving anybody well in any way, shape, or form. So I'm going to try the Google group, see if that works out a little bit better, and we'll go from there. Anyways, get right down to what we're looking at right now in the S&P 500. I'm going to show the larger view right now. I'm going to go 1 year, 1 day. We've been looking at the S&P 500 having formed a triangle since February 18th of this year. What we're looking at is an ABC, which would be leg A, another ABC, which would be leg B, and the reason why we're kind of looking at this top not being the top was because of the overlap in the structure that occurred in this area, both on the ESs, which is the S&P futures, and also the cash index. And a little bit of overlap on the futures is okay, but when you see this type of overlap inside of the cash index, then yeah, it's pretty much a big red flag telling us that no, something else is going on. And what we do, so another ABC, which formed leg B, another ABC, again, which another three-leg configuration, which formed leg C. Then we had another ABC, once again, which also formed leg D. And the fact that we had an ABC inside of this group here, but the thing is, we still have a little bit of latitude, which we could come back down again and retest this area. I don't want to be completely sure that we've closed leg E out yet at this point, but chances are we probably have, and we should be making the terminal high now. The only reason I'm giving a little bit of latitude is, I'll get into that structure a little bit in a couple of seconds. But the thing is, when you look at this, this can't be a 1, 2, 3, 4, and now we're doing leg 5 because once again, this area right here has now overlapped into this area, which is a hint to us that this was a three-leg move again, forming leg D, and this could be just A, B, and then we'll kind of come down and do C. But either way, I think what's going to end up happening over the next several days, we're either going to make a new high, or if we do pull back, we're going to pull back to probably this trend channel, stay above this level, and then we're going to make a terminal high. But either way, we're looking to form a new high once again. So get down to the hourlies right now, as you can see. The overlap I'm talking about in that last leg, this was the D leg right here, which would be another ABC, forming leg D, which pretty much had all the proper subdivisions, had 5 waves in here, 3-wave pullback, another 5 waves in here, so just a very strong zigzag. I'm looking at leg D as possibly being done because when we look at the cash market, it looks like we have an A, a B, C, and now we're moving up to a terminal high. And where I got this Fibonacci grid from is most breakouts out of a triangle usually has some type of Fibonacci relationship of the largest part of the triangle. So what we do in this case to measure the widest part of the triangle, which was from A to B, superimpose it onto E, and that the market could stop at one of these levels right here as we move forward. And of course, as we move forward too, we also want to be looking at the vector relationships that are being formed and so on. We bring up the ES chart at this point. So this is the ES chart that I'm looking at right now. This is also the last leg that we're looking at on the ESs, which would also be the E leg on the cash index. We had a nice 5-wave configuration coming down to leg A, Then we had a three-wave pullback, leg B, and then what it appears to have happened, it looks like we did an ending diagonal in the C wave position, which ended up producing 5 legs, which would be 1, 2, 3, 4, 5. I had a throw under in this case, and like most ending diagonals, an ending diagonal is usually quickly retraced back to the point of its origin, which would have been this level right here. So when you take a look at the amount of time it took to make this ending diagonal, and then you compare it to the amount of time that it took to retrace back to its origin, you can see that the move has been pretty much parabolic, and it has followed the typical relationship that we would be looking at. So for an ending diagonal, you want to see a quick retracement back to its origin, which it did. Adding on to that also is that most breakouts out of a triangle are usually swift, and they usually, as I said, they carry one of the Fibonacci relationships of the widest part of the triangle. So when you look at it, this C wave should have a swift reaction back to the upside, which it did. And when you look at the larger structure, which I just shown on the S&P cash index, a breakout out of a triangle is often very swift also, which is occurring. So you have two swift moves that are working in conjunction right now. And also big kudos to Tony, who last week had said that he had a cycle hit that was coming in basically at this bottom on both the cash index and the ESs, which ended up happening through the day, which I think he said it was either the 18th or the 19th, and he said from there we should be moving up to a new high, which we did. So when we start plotting planetary cycles and also Elliott wave, and also using vectors and all the other types of geometry that we look at, you can see how it's pretty much a given to peg the market where it should go. Sometimes we're wrong, but something usual we're wrong, we find out right away. And right now this is basically I'm looking at the first leg up in this fifth wave. And as you can see, we form 1, 2, 3, 4. I believe this is the fifth wave right now, so we should be pulling back now, do some type of retracement. Which Fibonacci projection the market's going to use, I really can't tell. I'm going to let the market decide on that. I did go short pretty much at this level right now. I'm looking for at least one more leg down, at which point in time I'm going to close my short. But as you can see, the market has used these levels right now for support and resistance as it's been climbing back up. And I've also measured the internal, this is wave 1, being projected onto wave 4, looking for a top of this first wave. And also, I also have the first projection of wave 1, which as you can look at this is a wave 1, 2, 3, 4, 5. But I'm looking at this first wave 1 to kind of set the tone for the following, this following move. As you can see, the market has been adhering to it. It's used the levels for support and resistance. It's pulled back, supported off, and moved up. And as you can see, we ended up reaching the top a little bit, came back down. Now we came back up. We hit the 261.8, and now we're reversing. So we should see a little bit of a correction going on right now, which may last just a few hours, maybe a day or so, whatever. But then again, we are looking to form a new high. But in the big picture, when we go back looking at the S&P 500, we're looking at this to complete a long-term terminal high that started back in March 09. And we're looking at the C leg right here being an expanded flat that ended back in March of 2009. Now wave 1, wave 2, wave 3 with all the proper subdivisions, wave 4. And now we're in the last leg. Looking at this, we have 1, 2, 3. I believe wave 4 may have been done a couple days ago, and still has a little bit of latitude to pull back. But if wave 4 keeps going the way it is right now, we're forming wave 1, 2, and we're probably in the middle of a wave 3 right now. And we're looking for a little bit of consolidation and another stab up to a new high. But with the stab up to a new high, if we're looking at purely just Elliott wave, this next stab up to a new high should basically bring us to the point where it's going to be a terminal move at this point in time. With that terminal move, this would be 5 waves up. Now we need to have a correction of this whole move that moved up from March 09 to this new high that we're going to form. And at that point in time, that new high will be retraced We don't know how far it's going to go yet, but once we get a first inflection, once again, in this counter trend that should start sometime soon, probably within the next few weeks, could be a few days, who knows, and then we'll see how this all pans out. But either way, we're looking for some more up action to a new high, and at that point in time, there's no other way I can really look at this and say, that all these proper subdivisions are in, and that could be a top. So anyways, it's just my view of the S&P 500. I'm sure there's a lot of other views also. That's okay. Everybody can pick what they want, and we'll see how it all pans out. But we are looking to marry synodic cycles, using um, sidereal synodic cycles of the market, planetary cycles, and also Elliott wave, and also the other analysis that we're looking at kind of refine our entries and exits of the market. And just hope you guys can join us one of these days, and we have a great group, and we'll see how it all works out. But anyways, like I said, this is July 21st, approximately 1 o'clock in the afternoon. Wish everybody good trading. God bless, and hope to see you. Have a great day.